Hey there, friends. Thanks again for joining us on Liberty Dispatch. On today's episode, we are joined by our friend, our brother in Christ, President and CEO of Rocklinc Investments, Jonathan M. Wellum. And we are going to be talking to Jonathan about the silly, tricky accounting tricks that our federal government has played in Budget 2025. So you're going to want to stay tuned to see just how Mark Carney, our economist in chief, is pulling the wool over Canadians' eyes. Stay tuned. Jonathan, thanks again for joining us on Liberty Dispatch. It is wonderful to talk to you again, brother.
Great to speak with you also, Matthew, and look forward to our conversation.
Yes, we have some important stuff to cover. And when we are talking economics and finance and everything, we love to come to you as our friend and our brother and big supporter of the show. So since we've last talked, Jonathan, quite a lot has been happening in Canada politically, not so much economically. Let's be honest. It's been a slow moving economic rollout from supposedly our economist in chief. Nevertheless, since we talked last, the Carney regime has finally, some 8 months after the March 9th election, released their first fiscal projections in Budget 2025. And Jonathan, it's funny too, because this budget only came out because of pressure from opposition parties on the Carney government, who had initially signaled that they weren't actually going to release a 2025 budget. But nevertheless, the news as of this week, Monday this week, November 17, 2025, Budget 2025 passed in the House of Commons to a narrow 170 to 168 vote in the House of Commons, which was a little controversial and had a lot to do with political machinations. But we wanted to get your initial take, Jonathan. What do you think about the budget in total? So we know that the projected budget is going to add something like $78.3 billion of debt, which is nearly double the $42.2 billion projected deficit increase from the 2024 fall economic statement, the statement that, caused Chrystia Freeland to resign, and all the controversy we saw surrounding that. So kind of initial thoughts, and then once you give your thoughts, we actually have a really illuminating interview that we want to kind of play and comment on from interim PBO, so Parliamentary Budget Officer Jason Jocks, and Vasi Capellos that they had on Question Period from CTV. So initial thoughts on the budget before we get into the clip, Jonathan.
Okay, here we go. I mean, I think look, it is a budget that should not surprise us from a Liberal perspective or an NDP perspective. It's top down, it's large government, it's expanding the size of the government. It's all about redistributing the wealth that's out there, not about creating more. And it's about more and more spending and less accountability. So that's what, as you've pointed out, we have an exploding deficit. It's going to hit $78.3 billion. That's the third highest in our history. The federal debt at the end of this year is going to be about $1.35 trillion. Back when the Liberals took over, it was around $550 billion. And so we've had, we're getting close to a tripling of our national debt in 10, 11 years, probably about 12 more years it will be triple. And that's an outrageous amount of indebtedness and spending that we've seen on the part of the government. And just to remind people, we actually had a surplus, a $1.9 billion surplus the last year that the Conservatives were in power back in 2014-15. So it's massive new spending. we have another $141 billion extra spending on top of what they were already promising to spend in terms of the previous government over the next 5 years. And so again, more and more spending. Green focused cronyism, I would call it, so that they're allocating more money to the, sort of the whole green agenda and providing more tax incentives to, again, to keep that sort of game going. And as we know, the green agenda is really about control. It's not about the environment at all. And it's increasing our costs, making us more unproductive and hurting our overall GDP and our growth economically. There's phony austerity practices in it. So they're talking about, cutting back on the public sector, but that's largely attrition. And that's coming after one of the most expansive periods of time for the public sector. So we've had this massive uptick in not only the wages and what we're paying the folks in the public sector, but also the numbers of people. So all of a sudden now they're talking about austerity, but that's largely attrition. So just letting people, as they retire, leave the workforce and not adding more. And I'll believe that when I see it. The numbers I'm highly skeptical. And then you've got public debt charges. So our interest charges are currently around $56 billion a year, and they're going to be going up to pretty close to 80 billion by the end of 2029, 2030. So, close to $80 billion. That's assuming that interest rates don't go up. That's assuming that we don't get a credit downgrade, and that's assuming that we have access to the capital markets. And so that's also highly debatable in terms of our credit rating over the next year or two if we continue to spend the money that we're spending. And so, again, in a nutshell, it's all top-down, big government, expanding the size of the government and its influence in the economy. They're talking about these investments that they're making, but a lot of them are really just boondoggles. They're not, if we want investments in Canada, it should be through the private sector, and it should be based upon rates of return and economic prospects. We should not have the government making these so-called investments. When the governments make investments, Canadians lose every time. So there's sort of a quick overview of the budget from my perspective.
Well, I think that's great because you anticipated one of the questions that I wanted to pose to you, which was this, whole deal, how Carney is selling the budget to folks through, touting that big I word that you're talking about. That no, this is actually a really, really positive budget because it means that the government is going to kickstart the Canadian economy into productivity, and that out the other end, we're going to have a booming economic outlook in Canada. Meanwhile, as you've mentioned, if that were the case, why haven't we seen the fruit of that given the growing expansion of our federal government over the last many decades at this point? It's actually not helped affordability. It's not helped anything in Canada's economic outlook. It's in fact got us into this bleak state that we're in, where we have this decade-long period under the Trudeau regime where we actually have no growth as far as an economy.
Yeah, I mean, I did a presentation in Ottawa back in October, and I spent a little bit of time just researching the last 10 years in terms of regulations and legislation that has been passed by the Liberal government since 2015. There's 6 major pieces of legislation that were passed that basically put a stranglehold on the resource sector, and in particular the oil and gas sector. I mean, they made it so that if you're going to put money to work in Canada, it's going to take years and years and years, and you're going to be basically stymied all the way along. And so money just leaves. And the estimates by the Heritage Foundation, also McDonald Laurier Group, and so forth, conservative estimates were that over the last 10 years, we have missed out on about $670 billion of capital, private money that would have come into the country if it wasn't for the legislation. $670 billion. And now that's private money. That's not government money. You don't have to raise taxes to get that money. That's private money that's going to come in and wanted to come into this country, but we turned them away by, again, the regulations, rules, and laws that basically just tied up the capital. And so when you look at that, that would be equivalent, if you just put a normal sort of multiplier on that from a GDP perspective, that would be equivalent, most economists would say, to about 1.55 trillion in GDP that we have foregone and we will continue to forego. Now that's a compounding number, as you know, Matt, because
Yeah.
if you're not putting capital into your economy, you've missed out on that, and that means you've missed out on it for forever going forward, right? And and so this is the kind of nonsense that when you listen and you hear, Mark Carney get up and says, we're going to, kickstart the Canadian economy. That's after they've kicked us in the gut and they've really
Yeah.
hurt our economy already. And they're talking about $141 billion or, 150, $200 billion. That's peanuts in comparison to what we've turned away in private money. And believe me, private money would know how to spend it and they would spend it wisely and we would get true economic growth from it.
Well,
The
okay.
problem with the money that the government's spending is it's going to go into, again, their pet peeve projects. It's going to be wasted. It's not going to be accountable. We've seen this, with Christy Friedland, when she went and got involved in some pipeline, I mean, it cost 4 times more than the original cost. So
Of taxpayer
you
money
can't make
too.
this up. You can't make this up, Matt. I mean, it's just insanity what we're seeing here in Ottawa, and the fact that Canadians don't see through this is very, is saddening to say the least. And we keep electing these folks into power.
Well, okay. So before we get in the clip, I think every time we talk, you give me so much fodder to ask questions with. But so let's lay out for people just why the idea of government investment is horribly stupid, asinine, and totally contra every economic principle ever, that is rooted in, obviously, good economic theory. Why? Because I think you touched on a little bit, but I don't want people to miss it. Why is government intervention in the economy not an investment, but actually a drain on economic productivity and wealth in a nation?
Okay, well, a couple of things. First of all, you have unqualified people making the asset allocation. So in many cases, you have political decisions being made in terms of what projects would go forward, and that's not the basis upon which you should be making those kind of investment decisions. Those should be made by investment professionals, experts in those particular industry. We think of, say, the oil and gas industry. Projects that should be invested in should be decided by that industry based upon the dynamics of that industry and where the bottlenecks are and where the opportunities to make the highest rates of return. For example, we need pipelines. We need pipelines. We need pipelines to the East Coast, to the West Coast. We've got oil that's landlocked in Alberta and in Saskatchewan to a certain extent. And they refuse to build pipelines, even though that's the biggest bottleneck to creating more wealth out of our natural resources. So why is that decision being made? It's political. They're not making proper economic decisions. They're making suboptimal decisions based upon their political agenda and upon the green agenda. They hate Alberta and they do not really want to benefit that province. And so, number one, you've got incompetent people that are driven by improper motives making capital allocation decisions. Secondly, you don't have responsibility to those decisions. So once they start spending the money, since it's taxpayers' money and not private money that's going to hold them accountable to returns, they tend to overspend, over budget, waste the money, spend way more than they should so that you're getting lower and lower rates of return on that investment. You're not getting the kind of economic bang that you should get in terms of economic growth. And so those are and then third, it just means more and more, the state gets bigger and bigger and gets more intrusive. So you just allowed the state to get larger, hire more people, and then you've got to justify their positions, and then they stick their nose into more and more things so that they cause more and more regulatory issues, more and more rules, and so forth. So it never works out. And the proof of that is anytime you've got government as a large percentage of the GDP, there is no growth in those economies. They eventually just become redistributory. Production is not focused on, and people become poorer and poorer and poorer. That's exactly the road we're now embarking on in Canada.
Mm-hmm. Yeah. So just to sum that up, so the first one is that there's a knowledge problem. uh,
Yes.
associated with government intervention in the economy. Second, there's an incentive problem, right? The economic incentives that apply to private economic activities and disincentives, right? That invisible hand, that as it were, that Adam Smith has talked about, it does not apply to government who can really tax and monkey their way with control of the money supply out of
Yeah.
economic bad decisions. And then
The,
thirdly, it's
yeah,
hyper
Matt, the
inefficient.
pain of the yeah, the pain of loss is very important.
Mhm.
When projects, when you feel the pain of a loss and you know that you're going to feel that pain of the loss, you really work hard and you think about the whole project in diligence and discipline. If the government, there's no accountability to losses. It's just taxpayers' money. They just run larger deficits.
Exactly. And I mean, both my parents worked for government for their entire career, mostly. Now my mom owns her own business. But I know so many people have worked in government, and the whole thing is like, oh, at the end of the year, departments literally like look at the budget, look at how much they have left to spend from the budget, and they'll just frivolously spend money because they don't want the federal government to reallocate the funds that are given to them to other projects. So it's creates this regime of inefficiency and wasteful spending. And so many government employees and officials are kind of ho hum about that fact that they're just deliberately wasting taxpayer funding in that way. So that's really really important for us to understand. There's a basic
Yeah.
knowledge problem with government intervention in the economy. There's a massive inefficiency, and the incentive structures are all wrong, that make the government make suboptimal, to use your word, economic decisions. And this is why we want to have you on to talk about these things, because this is the
Yeah.
level of
Yeah.
economic analysis that Canadians need to do when they're looking at budgets that are put forward by the Canadian government, because there's all sorts of trickery that is going on. So we have to be as innocent as doves, but as wise as serpents when it comes to assessing and discerning what our government is doing.
Yeah. Just think of those wonderful investments that Doug Ford and Justin Trudeau made in all these battery facilities. So we're going to make these, state-of-the-art battery investments. All that
Exactly.
money has basically gone down the toilet. They had no clue what they were doing. Absolutely no clue.
Yeah.
And they should never have stepped in. That should have been private money. If the private money wanted to take that risk, fine, but not
Mhm.
government subsidies. And we've lost all that money, billions and billions and billions of dollars. And who holds them accountable, Matt? No one holds them accountable.
Yeah, it's up to us ultimately to hold them accountable. But we can only hold them accountable if we're thinking, and if we're actually being good Bereans as it applies to the economic landscape in Canada. And that's why I really am interested on this really interesting interview, Jonathan,
Sure.
that was had, like I said off the top, by the interim PBO Jason Jocks and Vasi Capellos. Vasi is totally a lib. There's no doubt about it, but she's generally pretty fair in the way that she does her interviews, and I think in this case it's a very illuminating interview. So I wanted to get some of your thoughts. So at any point in the video, you can just tell me to stop it, Jonathan, and I will hit the space bar, and you can jump in if you have something to say. And we can just kind of go from there. It's an 8-minute interview. We might not cover it all, but it is really quite fascinating, and embedded in it is that sort of trickery that I was talking about. The fact that there isn't transparency, there's economic games that are being played here. And we've long on the program said that Justin Trudeau is the face of the globalist, regime that has been that Canada's been taken over by. But Mark Carney's more dangerous, though he looks like a benign grandpa who's kind of boring to listen to, and he stammers and ums all the time and whatever. Though he seems like an academic who waxes eloquent about the history of economics, he's more dangerous than Trudeau because he is a wolf in sheep's clothing. He is definitely the brain behind a lot of this, nonsense that we're seeing go on in our country. So I'm not surprised he's tried to pull some trickery to pull the wool over Canadians' eyes. So let's get into the clip here.
Welcome back to Question Period. Headed into tomorrow's high-stakes confidence vote in the House, MPs will be armed with new information. Parliament's fiscal watchdog has dug into the Prime Minister's first budget, and two major findings stand out. First, the PBO says it is unlikely that the government's stated fiscal anchor or declining deficit to GDP ratio will be respected. Second, the PBO maintains its view that the government's definition of capital investments is overly expansive. Jason Jakes is the interim parliamentary budget officer. Hi, Mr. Jakes. Good to welcome you back. Thank you very much for making the time.
Yeah, thanks for the opportunity.
I wanted to start off on the second point. What is it that you see as overly expansive, and how impactful is it that it is?
From our perspective, we think that the definition the government's used around capital investments is overly expansive. And in particular, they've thrown some things in there, some categories of spending, which other jurisdictions in other countries would not typically include. Most notably, the inspiration, of course, for this framework comes from the United Kingdom. And in the case of the UK, it's a far narrower definition. And of course, the biggest risk with all of this is if you're not spending on productive capital investments, if you have an overly broad definition, then you're not going to get the investment impact and the growth in the economy that the government expects.
What about fiscal anchors? That's what we spoke about the last time you were here. You were really tracking this very closely. They've obviously changed from what they promised to be the fiscal anchor, debt to GDP, and the platform to deficit to GDP. What do you see there?
Certainly, in the case of the deficit to GDP, it should come as no surprise that I agree with not the new government, but the previous government that indicated that the debt to GDP ratio is the most important medium-term indicator of fiscal sustainability and essential for securing Canada's AAA credit rating. The government has cut that anchor. So that is no longer part of the suite of fiscal anchors the government is using. And it's certainly not our place to judge which fiscal anchors the government uses. At the same time, the way in which the government went about this was certainly not transparent.
Okay, so before we get too far afield, Jonathan, the two criticisms that the PBO has. First, that they don't, and this is what he's talking about right now, that they don't believe the federal government is going to actually maintain true to their new fiscal anchor. And then secondly, that by changing the fiscal anchor, that they've too broadly accounted for what counts as government assets in how they're accounting for their budgeting. So maybe you can break that down a little bit for us in layman's terms so we can understand the subtlety of these argumentations and why it's so important for us to understand.
Right. Okay. First of all, what the gentleman mentions is this expansive definition of capital. Okay. So you've got the situation where the government's saying that some of their spending is capital investments. And in fact, they're really not deemed capital investments by most other accountants in other countries. So that you've got some of this spending that really would be sort of one-off spending. It's not going into long-term assets that are going to be multiplying and building wealth over time. They're one-off benefits. And so the reason why that's important is the government has put forward a number. I think they said in the budget about $311 billion in capital investments. But this gentleman is saying that there's about $94 billion of that is actually really not capital. It's really just incentives. It's some tax credits, some things that the government has adjusted. Why that's important is that means that really that $311 billion in number that's supposedly going into investments is much, much lower, much, much lower. In fact, they're arguing at least $94 billion lower. And that means that $94 billion is not going into anything that's going to be growing GDP over time. It's just going into some tax relief and some fine tuning, maybe some social welfare spending and so forth. And that's serious because now they're really lying about the capital that they're investing in the economy for the long term. The other reason why that's important is if he starts to talk about operating surplus in terms of his budget. And so if you're putting more and more items into capital spending, then you can argue, okay, well, we actually have an operating surplus. So if we're running, say, a $78 billion deficit, you could argue, well, we're making a lot of this is really just long-term investments. So if you look at the sustainable budget that we're running, it's not actually negative. It's only because we're overspending in these great, wonderful areas that are going to help grow our economy over time. Therefore, people don't worry. We actually have an operating surplus. But overall, when we include all this long-term spending, then that's what puts us into a deficit. But that's an annual deficit, and these monies that we're spending on capital, that's long-term investments. So we really shouldn't include them in the numbers. We're doing much better than you think. So this gentleman's pointing out, actually, they're playing around with all these classifications and they're obscuring the reality. That's what they're doing. And the reality is we're not spending nearly as much money on capitals as the government is saying. It's going into one-time, one-off spending, which is not going to grow the economy or GDP. That's a major concern. So that's just the tip of the iceberg. And you can see why he's saying, hey, listen, where's the conversation about this? Why are we getting more aggressive in our accounting? Even than other countries around the world would never do this. And so, yeah, as you said before, this is really sleight of hand in terms of what Mark Carney's doing. So that's the big thing there, the expansive definition of capital when it's actually not capital.
Yeah, but how about anchors, right? How about the fiscal anchors? Well, I mean, that's this type of language that usually gets people's eyes rolling in the back of their heads with boredom. But what does it mean to have a fiscal anchor in this way?
Yeah, the major fiscal anchor that's been used over the last number of decades in all of our countries is what is your total debt as a percentage of your total production of goods and services on an annual basis, which is what your GDP is. So when you look at gross domestic product, GDP, that's the total value of all goods and services that are produced within the country in any given year. And so when you look at that, that's your total production. And when you look at that number, you say, okay, what is our debt as a percentage of that total production? And that's really the benchmark and anchor that we've used over time. And largely, we 30, 40, 50%, these are generally seen as acceptable. We won't talk about, whether we should have any debt to GDP, but that's a different story, but just what's acceptable economic wisdom. And so what happens over time is that's the number that the credit rating agencies focus on. And you can appreciate that because what is your debt, but what's the size of your economy? Obviously, your debt as a percentage of the size of the economy, that's what you're going to look at. Now, what Carney's been doing is he says, let's not put that front and center. Let's look at our deficit as a percentage of our GDP. So the deficit is the annual overspending or the annual shortfall of revenue. So that's your deficit, which then piles up year after year to your debt, which accumulates over time. And so it's interesting to me that they're looking at the deficit as a percentage of GDP because our deficit as a percentage of GDP is not ridiculously high. It's a couple of percent. In the United States, they're running 6 and 7%, big numbers. And I think that's why Carney has been focusing on this deficit as a percentage of GDP. So he's saying, okay, we're maybe running 1.5%, 2%. So it's not all that high.
Yeah, I think it's 2.5%. Yeah.
Yeah. So don't worry about that because that's a lot lower than France, UK, United States, etc. I think, though, one of the things that he's doing is that we're not growing GDP. And so typically, because of the lack of investments in our country and the massive socialization of our economy, we've had no net growth of GDP on a per capita, per person basis. And so what I think they're doing, Matt, is because we have virtually no growth in our GDP, they don't want you to be looking at the debt to GDP, because our debt to GDP will continue to go up. Because if you're not growing GDP and you're adding to the deficits every year, then you're going to be increasing your debt to GDP, which is going to get the credit rating agencies and everybody upset. And that's the number we're going to look at in terms of what our costs of money are, in terms of Canada's bond, we issue bonds, we have to raise capital on the markets. Our interest rates will be dependent on debt to GDP. But because they're not growing GDP, they don't really want you to look at that ratio. They just want you to look at the deficit as a percentage of GDP. So I think that's the sleight of hand that's going on here, and it's very deceptive. This gentleman's not really spelling it out clearly, but what it's doing is it's masking the fact that our overall debt to GDP continues to rise. And that's a number we don't want to see. Because, Matt, you know what? If we were growing GDP at 3% a year, and our deficit was 3% to GDP, then our debt to GDP would not be growing, because we'd be growing our denominator at the same rate that we're growing our numerator. But in Canada, we don't have any growth in our denominator, our GDP, because of these barbaric, practices and spending and government interference that we're seeing across our country, and not developing our resource sector, et cetera. And so they don't want you to know that. They want to sort of obfuscate that. They want to hide that. And they want to get into this annual deficit to GDP. But in Canada, it's a terrible road to be on, because if you're not growing GDP and you continue to run deficits, then inevitably your debt to GDP goes up, and we're going to get in further financial issues and trouble. That's what the Carney government does not want you to see. Yeah.
So, sure, they can maybe obfuscate for the average Canadian citizen who doesn't really care about this, right? They're not thinking this deeply about the budget. It's not taking up that much brain space. But, Jonathan, can they fool the economists and the credit agencies and the people who they're borrowing money from is my question. Because I think at the end of the day, maybe you get a political win, or you can make things seem less bad than they actually are as you present them to the Canadian people. But to me, Jason Jocks here, he's not fooled, and I don't believe, if he's not fooled, that credit rating agencies and the like will also be fooled, right? Like, I don't suspect that will be the case, and this could spell even greater economic disaster for Canadians in the future, and blow out the budgeted projections that we even have in budget 2025 if something should happen to our credit rating down the line. So let's get back in the clip. Let's see if anything knocks loose that we want to comment on. But I appreciate you breaking down those two things, because I think that's exceedingly helpful for us to understand as Canadians, that the government in this budget, that is still ridiculous, right? We're talking about a $73.8 billion deficit, if I have that number right.
Yeah. 78.3 is, that's what they say.
Yes.
I suspect it's going to be larger than that. That's an estimate, and usually their estimates
always
are not
is
accurate.
You'd be on solid ground to assume as much, Jonathan. Which is just ridiculous. It's unheard of. But even to get those numbers, they have to play accounting tricks, which to me says a lot. But let's get back into the clip here.
We've had this fiscal anchor for over 30 years. Other jurisdictions look at the debt to GDP anchor and a declining level of debt to GDP as being the mainstay of fiscal anchors. It's something that the Liberal Party of Canada campaigned on in 2025 in April. It was in their platform. And without any discussion whatsoever, this fiscal anchor was eliminated.
And what about if you did apply that calculation? Like, where do you see debt to GDP? Because you had identified that in the lead up to the budget as, one of the primary things informing your position at the time, which was very controversial, that things were unsustainable fiscally, that we were looking over a fiscal cliff. So where is debt to GDP going, and why do you conclude in this that things are still sustainable?
So in the case of debt to GDP, over the medium term and over the longer term, debt to GDP is effectively going to be flat. So we no longer have a declining debt to GDP ratio. Based upon our calculations, there's very limited limited margin for error based upon the government's fiscal agenda at this point. And of course, looking back, it's important to remember that this is very different than what we've seen over the past 30 years.
So why are you saying now that it's sustainable, but a few months ago that was not? Like, were you mistaken before, or is the calculation on something?
In terms of, so previously, these numbers are very similar to the numbers we saw previously. The definition of sustainability is your debt to GDP ratio is stable or declining over time. And that's not my definition. That's the government's definition. That's the definition from the International Monetary Fund. So based upon the widely accepted international definition, that was the case before. That continues to be the case now.
So you still think the fiscal situation here is unsustainable?
I think the current fiscal situation, we moved into new territory. So based upon the previous government's fiscal anchors, it was a situation where the government, if they were targeting a stable or declining debt to GDP ratio, then there was very limited margin for error or room for maneuver. Now we're in a situation where the government makes no pretense about having a stable or declining debt to GDP ratio.
Okay, so that's an important point to talk about, Jonathan. So he said earlier, which we've played on the show, and it's come to the attention of a lot of people. He was speaking in committee and saying that as far as the PBO is concerned, our fiscal outlook as a nation is totally unsustainable. It's not working. It's, in the French, he said it was stupefying how bad the conditions are in Canada. And now he's saying not only does it remain unsustainable, but we've actually entered, because we've cut the normal fiscal anchor as our measure, as our canon, as our standard, we've actually entered new territory, which is even worse for the outlook of Canada's economy. Now, he's not as animated and clear in the way that he puts it forward, but I'm not wrong in understanding that is what he's telling Vassy at this moment.
Yes, I mean he's very careful and nuanced with what he's saying, but he's looking at a country that is not growing its GDP on a per capita basis for 10 years, and we're not putting the capital back into the country. And now you've got these games going on at the federal level where they say they're spending on investments, but it's actually not investments. And they're talking about operating budget surpluses, but they're not operating budget surpluses. And they're going to ultimately, I don't think he wants to say this, but the debt to GDP ratio is going to go up, and there's no question it has to go up, because if you're running fairly large deficits and you're not growing your GDP, you have no choice. It's going to continue to go up, and that's what he's looking at as unsustainable. I mean, if you look at our overall economy, and you look what's happened just with the recent election of Donald Trump in the United States, we're going to lose more and more of our manufacturing business because it's going to go south of the border. It's not. I mean, Trump has already won the tariff wars. I mean, he's won it already. He doesn't even have to negotiate anything more, because if you're a large company, a large business, and you're doing manufacturing or you're in the auto industry, you're not going to invest more money in Canada. There's absolutely no way. It's going to go south of the border. And so if you're looking at our manufacturing sector being hollowed out, and you're looking at this interference with the oil and gas sector, where we're not prepared to put the money into it, we're not prepared to build pipelines, and we're making some of these nuanced so-called investments that are all channeled through, the best interests of the country, according to Carney and his cabinet, then of course we're not going to be growing and expanding the wealth. You said before that, how are you going to fool the credit rating agencies? And we're not going to fool them, and we're not going to fool the international capital markets, and the bond markets are going to reprice our debt and the risk. And our dollar has been weak. It's getting back closer to 70 cents. And I would expect that, again, if these trends continue, we're back down into the 60s. We hit 61 cents. People might not know this, but we hit 61 cents back in the mid 1990s when we had a crisis with our currency and we had liberal policies and so on. And the other people that aren't fooled is the average Canadian. People are feeling it. I mean, they're fooled in terms of who they vote for, but in terms of the feeling the expenses, when they're buying food, when they're buying insurance, when they have to buy a new car or lease a car, home costs, everything is higher. and it's going up in value as our dollar goes down and as the government eats up more of the productive capacity of the country. Then we're not producing the goods and services that we need to, and then you're putting the money out there anyway and spending deficits. What happens? Inflation. You lose more and more. It's a hidden tax that continues to hurt all Canadians. This is where we're at in this country, and the only way to solve this, economically, is to take a hacksaw out of the public sector into the size of the government, to privatize more and more of our economy, and to get the rules, the regulations, and the red tape off of our industry so that they can actually produce and capital will come in. This is not rocket science. They're doing the exact opposite. And to the extent that
they're playing accounting tricks, right? Like instead of doing the things
they're trying to mask it.
Yeah.
They're trying to mask it, and that won't work either. But it just shows how fundamentally dishonest they actually are.
Yeah, well, we'll leave the clip there because I think we mainly got what we wanted to get from it. Now it's interesting because we looked at how nuanced and tactful Mr. Jocks was in his tone, but apparently him just pointing out the shenanigans that the Carney government is doing with the budget and their fiscal outlooks has got him in a hot water, and they actually go on to discuss that in the rest of the clip, which we will link in the description below, about the Canadian government putting out his openings for his job because they're not too happy with the fact that he is holding the government accountable, which is actually his job. And he's doing it in a very, very tactful, nuanced way, but that is still too overt for the government because they want to play these accounting tricks. So, okay, Jonathan, where do we go from here? What is happening in Canada, and what can ordinary Canadians do, right? As you made mention, we're feeling it. People are feeling cost of living is ridiculous. Housing crisis is only getting worse. That the bubble is probably going to pop. It's already looking like housing prices are just plummeting in Toronto and Vancouver, which are the two most expensive markets in Canada. How are Canadians not going to black pill because of what's going on? What hope do we have? What advice do you have for people that, okay, well, our government might be playing accounting tricks, but at least I can get myself into a position where my family will be taken care of, where my church will be taken care of, where our fiscal outlook is the exact opposite of the Canadian government.
Yeah, I mean, it's a good question. I think you need to continue to focus on trying to balance your own budget and being fiscally responsible and being very careful with your own spending so that you can set aside money and to continue to invest prudently and carefully. You don't want to be imprudent like the government, so you do have to think long term. We're in this for the long haul, and we're also in this with the opportunity or the idea that we can hopefully change the government and put a government that's more responsible and hold our MPs accountable to proper action. So I think a couple of things: be responsible yourself. Don't let, just because everyone else is irresponsible around you, don't let that happen. If we do see a massive correction in the housing market, which is probably inevitable, then there's going to be some opportunities also for people to be able to actually buy maybe for the first time and be able to afford a home. Try to be innovative, creative, start your own business, invest in your friends, spend money within your circle of influence. If you're in a church, work with other people in the church, support each other, stick together. And keep strong families. Nothing worse than a family being broken up, and the costs of that, of course, on every level. And then get involved in the political process. I mean, find out what's going on in your area. Write some letters to your MP. Look for a better government next time around. I mean, this is still a minority government. There's a lot of angst in the country. There's a lot of reasons why things could change. We could get better government. Let's look to that direction. I was in Ottawa on the 8th of October. I was encouraged by many of the MPs I did meet. They seemed to understand the gravity of the situation. They They look at this as a planned takedown of Canada. I mean, they literally talk that way. These are MPs. Most of them I talk to are on the Conservative side. They're not naive to what's going on. We've got a lot more voices, like the Dr. Strauss, I think is his name, in the Kitchener area. You've got Andrew Lawton. You got these people speaking out. So we do have a much more fiery backbenchers within the Conservative Party that are speaking out. And I met some of them. I talked with some of them, and they get it. I mean, they understand the seriousness of the hour we're at. So we got to support these people. Get behind them. Get behind whoever is going to speak out in terms of these issues, because we do have a country with tremendous wealth, tremendous resources, and money will come back to the country if there's a reason to come back, and it's going to be respected. There's still a lot of mining activity going on in the country also. I was recently, just the last week and a half ago, in Zurich, Switzerland, at a mining conference, and most of the companies that were there were Canadian. So in the mining sector, this is non-oil and gas, there's quite a bit of incentive to continue developing our resources: copper, nickel, gold, silver, cobalt. There's a number of these polymetallic businesses, and they are saying that the government is easier to deal with federally. That's what they're telling me. I can only tell you what I'm hearing from some of these companies. But it's the oil and gas sector that's really being strangled, and we need to again continue to encourage freeing up of the resources there, and support Danielle Smith, Alberta, Saskatchewan. Scott Moe is doing some good things out there also, and then put pressure on Doug Ford. We're here in Ontario, and he's been a complete disappointment. He's a liberal, not a conservative at all, and he has not stood up for businesses in this country, and he's kowtowed to the Liberal Party in Ottawa. And so again, speak out, get involved, talk to your neighbor. We've got to, this old-fashioned, got to turn this government over. And again, I'm speaking from an economic perspective. Spiritually, of course, we need a complete revival across our country. We need a massive spiritual move. We have, there's spiritual bankruptcy right across our country, and that, as you know, is the most important underlying item that needs to change if we're going to really change the country long term.
Yeah, and I can't help but think, Jonathan, I've been thinking a lot about like the biblical idea of the tithe, the biblical principles of charity, and the idea that is put forward in Scripture that the economy of the kingdom of God is one of service. If you want authority, you must serve within the kingdom of God. And that is actually the basis of, free market economics, right? You have to provide a good or a service or labor that actually serves the needs of your neighbor, right? In order to make any wealth. So that is what we should be thinking about as Christians, is how can we be productive? How can we serve? And God loves to bless service with authority, that as you serve others, as you bless them in whatever it is that you do, God loves to confer his blessing on that type of service. So I do think, Jonathan, there's lots of room for opportunity, even in the midst of, the bleakness of the Canadian economic and fiscal outlook. But thankfully, we have men like you who are on the case, who are helping us think through these important economic decisions. And you are so gracious in giving us so much of your time on the Dispatch. And we'll have to have you on, because I'm sure this affordability, investments, budgets, regulations on the economy is forefront in the Canadian consciousness right now. And we're really thinking about how, as the Dispatch, we can help people think through the current fiscal outlook in Canada at a higher level than you get, at CTV or any of the mainstream media outlets or whatever. We're not about creating clickbait. We're about thinking deeply and thinking God's thoughts after him. So that's why we exist as a program, and we're thankful for all the support of Rocklinc as well. Jonathan, if people wanted to know more about you, or if they wanted to talk to you or your, financial team to situate themselves better financially at this moment, how would they do that?
Yeah, and just before I give that information, let me just dovetail with some of your comments in
Hmm.
terms of service. We need to think long term and invest in our core institutions. So don't let the frustration of the moment that get you so
Amen.
negative that you think there's nothing I can do. That's why it's so wonderful to see the Christian schools, the classical schools being developed across the country, investing in businesses and industry, taking a long-term view. We don't, God is the one that's in control ultimately, and He's got His plan. And we are optimists. I'm an optimist. We continue to have children, families in a society with a 1.1 to 1.2%, 1.1 to 1.2 per woman birth rate.
Hmm.
Goodness sakes, if God does bless, then have more children. We can reproduce. We need to, educate the next generation, produce the next generation, be
Hmm.
fruitful and multiply. So again, you go back to those basic commands. They never change, even in a
Hmm.
difficult environment. So don't let the frustration of, Mark Carney drive us from our biblical mandates and biblical plans.
Yeah.
In terms of getting access to us, rocklinc.com, so rocklinc.com, and you can email us at info@rocklinc.com. There's information to contact us. We'd love to speak to you. We've got many people have come through Liberty Dispatch. We really appreciate it, and we'd love to work with you and at least come up with some godly principles that you can use in your financial decision making that will be helpful. We did just launch last week a new ETF, an exchange traded fund that trades on the Toronto stock market now. So if you want to get access to a wonderful pool of great businesses, that trades under RKLC. So Rock, RK, and then LC Link, RKLC on the Toronto stock market. And you can get our investment expertise there if you use your direct account and buy some shares. So those are ways to touch base. But Matt, we really appreciate the work that you and Andrew do, and the
Of
Liberty
course.
Dispatch, and the information that gets out. And we love all the clients, your listeners, if they want to come over and talk with us, no pressure. We'd love to have that conversation.
Awesome. Well, thank you, brother, for helping us think through the current budgetary situation in Canada and for giving us, a good outlook towards the future of how Christians in Canada can be productive in their economies, their house law, oikonomia, moving forward, regardless of what our insane government has cooked up for us. So thank you, brother. Really appreciate it, and God bless you all. Thanks for listening. And as we say at the end of every episode, it's for freedom that Christ has set you free. Stand firm, therefore, and do not submit again to a yoke of slavery. Until next time, everybody, God bless.
Liberty Dispatch has been brought to you by SDG Media. If you want to stay in touch with us and all things Liberty Dispatch, join our email list, or support the show, head over to ldcanada.substack.com.